let's just bring in Anthony Chan. Anthony, you're here. You're watching these numbers cross. Just your reaction at first blush to this.
At first blush, we know that after the benchmark revisions were conducted, the second quarter is the strongest quarter of the whole year. So the numbers are strong, but the underlying trend is very good. And it looks like the third quarter is still going to hold up pretty strongly because you're still going to get a strong positive contribution from inventories. Yes, trade will subtract a little bit because it gave us a lot in the second quarter. A lot of that was front loaded. But the underlying economy still looks like a 3% plus growth number for this year.
Well, the interesting aspect of the report, I'm looking at it right now, is actually consumer spending was below the estimates and revised down from 4% to 3.8%. So the consumer spending came down, and that was downward revisions in motor vehicles, non-durable goods, and healthcare. So, I mean, that's a pretty interesting aspect because healthcare has consistently been raising it higher than the rate of inflation, and we know that's something this government does need to address.
After-tax corporate profits with inventory valuation and capital consumption adjustments, John Hilsenrath, a measure of profits from production, they were up 2.4% in the second quarter, but the prior quarter they were up in 8.2%.
Well,
they were up 2.4% from the first quarter.
If you look at that the way Wall Street looks at profit numbers, which isn't quarter to quarter but year over year,
yes,
it's 16%. It's a 16% year-on-year growth, which is a really good number. And from what I can see right here, it's the best number we've had in 6 years. Double-digit profit growth, that's what Wall Street wants to see, and that's what the economy delivered.
You're right. That was the strongest year-over-year reading since the first quarter of 2012.
Right, right. So, Anthony, the question I've got for you is, how is the consumer looking going into the second half of the year? We got some auto sales numbers out earlier this week that looked a little bit on the soft side. Are we going to see the consumer continue to drive the economy in the second half? By the way, the housing sector also looks a little soft. Or are we going to see some sign that that's rolling over?
I actually feel very good about the consumer. You probably saw that the savings rate was revised higher, which means that consumers have a lot of firepower. Here we can debate a slight downward revision on consumer spending, but that number is clearly above trend. That's a very strong number, and with the firepower of savings, I think in the second half of the year, consumers will still be spending. I was also impressed. You got a nice upward revision in intellectual property investing. And that, of course, tells me that productivity at some point could start picking up.
Well, so those are the two really big engines for the economy right now. Consumer spending, which is driven in part, we think, by the tax cuts, and also business investment. And, you know, we'll have to see whether there's follow-through of impact on tax cuts there. And then the third piece, the third leg of this stool that we're looking at this morning is corporate profits are really strong.
And corporate profits, as you said correctly, is very strong.
Well, and consumer sentiment is exceptionally high. I mean, so if we look at these numbers, then we
18-year high yesterday.
18-year high, and that's going to trickle into the rest of the year, because if the consumer's feeling good, they're going to spend more money. And as Anthony alluded to, I mean, intellectual property investment rose at 11% pace. That's revised up from 8.2%. Companies are reinvesting in their businesses. I mean, this goes back. If I look at the new orders index from last month, it was still humming at like 58, which is well expansionary. So companies are reinvesting in their property, plant, equipment, people, you name it. They're deploying their capital. So no matter what anybody says, this business climate and environment is very conducive.
We still found out, though, and this goes to the issue of trade, that net exports added 1.17 percentage points to that 4.2%. Yeah. Concerns that was a pull forward of exports, and that will actually weigh on the current quarter.
We think what happened was that a lot of companies were exporting soybeans ahead of these tariffs, particularly to China, and we're going to lose a little bit of that in the third and fourth quarter. So that's a pretty big contribution.
That's a big. You're absolutely right. That's a wash in the third quarter versus the second quarter. But the real question is, what will trade do to overall real GDP over the next 12 months?
So answer that question.
And the answer is pretty straightforward. If we have a trade war, obviously it's going to be a subtractor of economic growth. But recent developments suggest that we're moving in the other direction, that we're moving in the direction direction of making deals. We saw the U.S. and Mexico agreement. We know Canada is getting engaged. We know that at some point, perhaps after the midterm elections, we're also going to get China engaged. So in short, the momentum is going in the right direction for China.
How do you
No, I
measure
wanna
this
ask you-
momentum? How close are we to getting something done with China?
Not close, I
We
don't
just had negotiators here a week or so ago, and they didn't make any
Well,
progress.
I'll push back on that. I'll push
I
back
will
on
tell
that.
you how I measure. When all of a sudden you see that other countries are making deals, you don't want to be left behind. And Canada certainly in that boat, and at some point China will be in that same boat. So compared to 2 or 3 weeks ago, the momentum is going in the right direction.
Well, to that point, John, the real worry is not how the dollar amount of goods imported or exported that have been tariffed so far. It is the fact that businesses are worried about the next $200 billion
Right.
and auto tariffs. So if you
And the
do,
red tape that comes with it.
right, but if you do something, or the swampiness, as I call it, if you do something to ease worries,
Right.
the concern is that businesses react and cut jobs or cut investment plans proactively ahead of anything happening. If you soothe their concerns and get them to hold off on any action, that does help.
Well, I agree, and we saw the stock market behave that way
Right.
this week when there was an announcement of some agreement with the U.S. and Mexico.